I've been asked rather by a lot of students over the years, out of all the things that I teach, what's the closest thing to how I actually trade? What I make available as a model and publicly releasing it, which one of them is the closest thing to what I actually do when I'm trading with my own money? And it's model 6 and model 7 because it's a universal model. And that means you can use it every time frame, any time frame, every time frame. And it still isn't really everything, obviously, but out of all the models that I have released and or will release, what I teach in model 6 and model 7 in those charter price action models, that is the closest to what I do. That's not Enigma, that's not, every aspect of what I'm doing, but generally that's how I'm doing it. So if I'm bullish, I can be buying the buy side of the curve of a market maker buy model, which is what this is here. If I'm bearish, I'll be selling short the sell side of the curve, which will be the opposite side, the down movement. But if I'm short-term bullish because I expect it to go up to create a reversal to go lower, I can buy during the buy side of the curve of a market maker sell model. And it's easier to understand it here, where I could be going short here, be bearish, and aim for liquidity. And if it's going down, underlying higher time frame premise, because we're at all-time highs and nobody should try to pick a top in the marketplace, going down to take sell stops. It's going down there to accumulate those sell stops, to buy them, and then start moving higher. You won't have the experience to determine this turning point, which is why it's called smart money reversal. You don't need to know that. Once it comes up in real time today, I did it with you. This is where you'll see the low risk buy form and the market rallies up. We have a shift in market structure. It goes into a breaker and eventually gives you your second stage accumulation at the last premium array over here. And then boom, right there. And the market does what? It rips higher, digging into the liquidity that's leveled higher and higher and higher above that high. So let me just give you a model real quick. If we understand what I'm going to be teaching you in greater detail in model 6 and model 7 of the price action models, you can create a model out of just components of the sell side of the curve of a market maker buy model, where you're looking for just individual components that would give you your setup. So perfect example, let's say you've been trading for a long time and you could see that they were going to go to that sell side like I did this morning with you. You could be buying that. That's your turtle soup. Okay. That's where you do your work as a long buyer. Okay. Some of you that don't have the experience, when it starts to rally up, your eye goes over to the sell side of the curve here, and you see this single candle right there, which creates what? On the 30-second chart, let's go back into it real quick. That's this candlestick right there. That's the sell side imbalance, buy side inefficiency. So the market rallies up. What do we see in this time frame? An inefficiency and a swing high. Shift in market structure, there, bullish. That low's intact. This is where you go in with a low risk buy. Using what's on the sell side of the curve to the left of the lowest low, this is your first array. Carry it over to the buy side of the curve, which is anything to the right of the lowest low here. See if it offers what? Support. The market does what? It rallies, creating the signature with the body saying, okay, yes, the bodies are suggesting that it's supporting price. If you're ever looking at an inefficiency, this is also for your notes, since I framed this inversion fair value gap on the 30-second chart, I would demand that the bodies are respecting it on the time frame I observe it in. On a lower time frame, the bodies can be outside of that. Okay, real big, huge milestone right there. Whatever time frame you see the inefficiency in, to have faith in it, to trust it, and to use it for your setup, it must respect it by its bodies. This is a mohawk. This is just like errant price action that we allow for. It's normal. It doesn't change or undermine the underpinnings of what we're trying to trade on. So the market rallies up, and you go back over here, and here is your old high. Carry that forward. What is it going to become once it trades to that level? A breaker. This breaker, okay, was formed on the 30-second time frame. No, it was formed on the 1-minute chart. But you can see the bodies, even in this lower time frame. Look where the bodies are closing and opening. See how they're inside of that candle? See how it's staying in there? We're getting wicks, yes. But the bodies are telling the narrative that I was on side. The rally's up, and then right in here, what is it doing? Every PD array can be scaled. Upper quadrant, midpoint, lower quadrant. And then you have the extreme high and low of it. Much like I did with the opening range, where I measured the highest high and the lowest low of it. And then there is the upper quadrant, the middle, and the lower quadrant. Opening range isn't a PD array. It's a range of inefficiency that can be scaled and measured. Every PD array has that same aspect to it. So if you look at the range that's created with this breaker that was used on the 1-minute chart, look at that right there. That's on your upper quadrant. Yes, it wicks down a little bit, but it's going into that small little fair value gap right there. And this is all occurring on a 30-second chart. Crazy, ain't it? And then the market rallies up. And then we create the last premium array on the sell side of the curve over here, and it trades into it here and then sends it up. every one of these individual price points, like that could be your model. Like you're always looking for the unicorn. The unicorn is a second stage reaccumulation in a market maker buy model, or it's a second stage of redistribution in a market maker sell model. That's where your biggest price run, the most energetic, the one that has the most magnitude, the immediate run, bang for your buck, that's the one you want to be looking for. That's why I call it a unicorn. If you're looking for moves that's going to be very energetic, they're just really quick, they start running for you, and they just give you instant gratification, that's the one you should be aiming and studying. The most advanced would be buying the smart money reversal, pyramiding at low risk buy, accumulation, reaccumulation. So you'd be a buyer, pyramid, pyramid,